Good morning, everybody. Welcome to the Flow Show, 25th of March, Tuesday, Turnaround Tuesday, as some like to call it. Our Yank friends like to call it in our chat room. We'll see if we get a turnaround of a turnaround of a turnaround going on. Well, there's already been a bit of a turnaround if you're trading the euro. 1 minute we were heading well under 108, and now we're back above it. So, yeah, already got a bit of a turnaround on it. Must be true. Right, first things first, I've got a complaint, or I've got a question. Does someone know where the add to watch list menu has gone from TradingView? Used to right click on a chart and you'd have add to watch list somewhere in that. Now either I've gone completely blind or it's not there anymore. So if someone can tell me where that's gone, that'll be great. That would help me along because I'm trying to do something. Secondly, I've had one of my brainwaves. We're going to do something new today, or try and do something new. It could all go horribly wrong. That something new is going to need your input. Okay, so stand by your beds, get your charts ready, because I'm going to be asking you some questions about charts and whatnot shortly. But anyway, let's get stuck into the headlines first and foremost. See what's going on. Yeah, I see that, Gav, but they've moved it. They used to be in the context menu. Just right click, add to watch list, bingo. Now I've got to go all the way up to the top right. Tossers. Right, anyway, moving on before I start really ranting. The PBOC, they've tinkered with their MLF program, the Marginal Lending Facility, or whatever it's called. This has rates attached to it, and it falls into part of their monetary policy rates stuff that they've got going on. Okay, so this is one of the rates that they can hike, cut, to ease or tighten as they see fit. They announce the rates once a month, like all the other rates, like the LPR and whatnot. But what they're doing now, and I'll read you the jargon, and then you can understand it as much as I can. They are now going to conduct their MLF loan operations on a fixed quantity, interest rate bidding, and multiple price bidding basis. Okay, long story short, they're giving up on just us announcing a rate and doing all their operations at that rate. They are now pretty much making it an auction, if you like. So if the current rate, for example, is 2.5%, and you want to use that facility, you pay the 2.5%. Now they're opening up to bids. So if you want to borrow 10 million, 100 million, 200 million, instead of doing it at the set rate, you put in a bid rate and they amalgamate everything together, and that's how the rate is set. Now, obviously, there are controls in that. You can't suddenly bid, oh, I only want to pay 0.1% interest when the rate has been 2.5% or something. So there's controls and whatnot going to be in place. But it just means that they can ease the rate, or these operations, interest rates can be eased without actually doing a rate cut. So it's easing in disguise, if you like. Anyway, that's what they're changing with that. It is just another easing step that they're putting into play. Right, moving on from that mess. Bank of Japan, they had a bit of data out. BOJ core inflation reading year on year for March, coming in at 2.2% unchanged. This is a trimmed mean core measure. They also have a weighted mean core measure, which also came out unchanged at 1.4%. So no change there. Some of you may have already seen on various headlines, we've had the Bank of Japan minutes out overnight. Do remember that these minutes are for January. We've only just had the March meeting, so they are a bit out of date. The broad line from those minutes was that most members saw a rising likelihood of achieving the outlook. As I mentioned yesterday, from Ueda and Uchida, we had a slight shift in comments that they would look to hike if it was likely they would achieve their outlook. Okay, so that subtle shift there was pointed out. Ueda was out again in Parliament overnight, said it will take some time to determine how to manage the central bank's ETF holdings. Okay, we know that the Bank of Japan has been buying ETFs as part of their QE policy alongside bonds. Getting rid of bonds off the balance sheet is a bit easier. Every other central bank is doing it. You can do QT, you can just let them roll off, whatever you want to do. But ETFs is a whole different kettle of fish. Okay, you start selling your ETF holdings when you hold as much as they do, then you risk routing the market, basically. And no one wants to be in front of that. And the Bank of Japan don't want to cause that financial instability. So that's the big sticky point they've got to deal with next in terms of what they do with what they do with tightening and getting policy back to normal. So we want to be in their shoes, but they're going to come up with a plan at some point. Now in Japan, they'll probably be selling this stuff over the next 100 years. Meanwhile, PM Ishiba sort of half shooting himself in the foot here. He says that they will be introducing strong measures to counter rising prices. So finally, Japan's got inflation and the Prime Minister wants to stop it. So a bit counterintuitive there in terms of that. The whole point of countering inflation was getting wages up, getting employment up, getting the economy moving. Then you can counter inflation. But it seems some of these price spikes and whatnot, particularly around energy, still causing problems. So they're going to look to do strong measures to counter those rising prices. Bank of England Bailey says that the UK faces strong headwinds and the UK must raise its growth potential. That's a hope trade if ever I've heard one. He's seeing businesses delay investment as a result of uncertainty. And that line, uncertainty, is pretty much the standard comment from every central banker these days, as I will point out shortly. UK's Reeves, this is the FT reporting pretty much all the super nuts from the spring statement tomorrow via the FT, says that the OBR is going to cut growth forecasts from 2% to 1%, so cut them in half. Reeves has had her 9.9 billion fiscal headroom wiped out. They're going to predict a 4 billion deficit, and her statement will include over 5 billion in additional spending cuts. We have had a survey, well, we've had a few surveys out from people, firms, and what they think is going to be coming from this spring statement, whether it's going to be positive or negative, and the majority view is that it's all going to be negative. And if that's the case, people are going to maybe look to start saving, stop spending, and the economy is going to take a hit even more. So sentiment, again, we're seeing it in action potentially here as well. Speaking of sentiment, we had the German IFO index out. Business climate improved to 86.7, roughly in line with expectations there. Current conditions also improved to 85.7, slightly beating expectations, both are up on last month. And the expectation numbers also coming in hotter than expected, well, depending on which calendar you're looking at. I had other expectations showing 87.3, so it was a beat on another calendar. Anyway, up on last month, and this one pretty much reflects where the optimism over the German spending comes in. So not even a 2-pip rise there. So a bit like the zoo, it's not as if it's jumped 15 points on that big optimism. So by and large, it looks like we are over the fiscal spending trading hump, if you like, in terms of what's going on in the euro. We know it's coming. We know they're going to borrow. We know it's going to come over 10 years. As always, we get a big move at the start when we first hear about it, but now we're past it. It's in the rear view mirror, and everyone's going to forget about it for the next 10 years. ECB BODs. ECB's McClough says we must be prudent and cautious on monetary policy. And here we go with the line, seeing extreme uncertainty at the moment. ECB's Escriva current environment is extremely uncertain, and the downside risks currently outweigh upside risks. ECB's Muller's rates are not restricting the economy or investments, but not sure how much more or when the ECB can cut rates. ECB's Casimir says he's open to discussing a rate cut or a pause in April, says services inflation will be key and that we are already in the neutral rate zone. ECB's Wojcik says April meeting is completely open, but more data is needed. So could be a pause, could be not. Likelihood is it's going to be a pause at the April meeting. Yesterday's PMI data from the US, and following what we saw a bit in Europe and particularly in the UK numbers as well, manufacturing going backwards. That was a theme that we saw in a lot of the PMIs. So March has been a stinky month for manufacturing. That went from expansion into contraction, but that was countered by a very positive looking services number, 54.3, was only supposed to go up 2 pips, went up 3.1 pips instead. So very positive. However, and I mentioned the UK PMI, which also did similar, as you can see, just above, jump in services, backwards in manufacturing. The numbers don't tell the story. The underlying details do. So from the S&P report on the US, they said that output growth revived in March, but confidence in the outlook deteriorated further. They said jobs growth was also muted and subdued amid heightened uncertainty about the outlook and concerns over rising costs. Input price inflation accelerated sharply, especially in manufacturing, got to near a 2-year high. A lot of that attributed to the impact of tariff policies. However, though, competition amongst businesses limited the pass-through of higher costs to selling prices. So that's not good news because firms are facing higher input costs, but they're struggling to pass those costs on. That creates a margin squeeze. They also said that confidence fell to its lowest since October 2022. Okay, now this is business confidence. We already been speaking about the pros and cons of consumer confidence numbers. This is business confidence. Okay, so you're starting to see it now. This is why I say sentiment is a huge part of trading. It's a huge part of the makeup of economies. It's a huge part of whether you see growth or not. So now we're seeing the consumer and businesses confidence falling. Okay, it will start to have an impact on the data at some point unless something changes. Fed's Bostic raises that point. He says there's a lot of uncertainty on the economy. They won't reach their 2% inflation target until early 2027. And he says, I question whether consumer sentiment will be a leading indicator of weaker activity. It's better for the Fed to be patient, doesn't want to move in a direction and then have to reverse it. It says Fed actions may have to be larger once the direction becomes clear. So he's calling into question these consumer sentiment surveys as well. He's not sure whether it's a leading indicator. I'll go out on a limb and say it will be. Okay, I'll be watching it. We have been watching it and we will continue to watch it and see what those numbers do and see how they transpire into the hard data. Right, the old tariff mess. A White House official says, and again, this has been a bit more dumbing down this week to where we were before, says there's no final decision on the April 2nd tariff plan. Then Trump obviously popped up and said that tariffs are going on, blah, 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 blah. They'll be putting secondary tariffs on Venezuela. And then the Treasury came out and said some of that stuff will get kicked into May. And then Trump did the 180 of his 180, saying he may give a lot of countries breaks on tariffs. We will be announcing additional tariffs on lumbers, cars, chips over the coming days, but not all tariffs will be included on the 2nd of April. We've seen, obviously, a reaction in currencies like the MEX and the Canadian dollar, all gaining on that news. So dumbing down again, deadline kicking again. That's where we are on that at the moment. He also rumbled on about getting a rare earth deal signed, but he also said in Ukraine they are talking about ownership of a big nuclear power plant. So he's getting right into the infrastructure over there as well. He also had another little jab at the Fed, saying that he wishes they would take rates down. US Treasury Secretary Bessent he expects interest rates to fall, and he had some helpful advice to all the government workers being given their marching orders. Said laid off people can go into the private sector, which is half a fair point because it's been quite strong in the jobs market. So I'm sure the people who have been laid off won't be thinking that comment. Oil OPEC Plus is apparently going to proceed with plans for the next monthly output hike in May, according to no less than three OPEC Plus sources speaking to Reuters. So we're playing that game all over again. Right, that's it from the old headline front. And I'm going to repeat, get your charts ready, boys and girls, because I'm going to be asking you questions. And if you don't pop up, this is going to be a very quick show. Okay, so I'm getting you to do some work today. What have we got coming up today on the calendar? Not a lot, bit of housing data, building permit revisions, a few more Fed heads, got house price data from the FHFA and Case Shiller. Nothing in house prices recently waving any warning flags. We do have US consumer confidence. So there we go, another consumer confidence number to deal with. Within that will be the 1 year inflation expectations as well. But again, the Fed heads are questioning whether this data is forward looking. Well, we'll get to see that. And then around the same time, we get some house sale data as well, new home sales out from that. So those are your highlights later on this afternoon. Right, let's go. Here's what we're going to do. Okay, I have just created a brand new watch list. In this watch list, I've got 5 assets. Okay, and I'm not picking on anyone in particular, but Derej, I'm giving a nod to you. Most days you come in asking what our view of gold is. Okay, most days it hasn't changed, so you shouldn't need to ask us what gold is going to do. You should have your own analysis. So what I'm going to do here, just an example, I'm going to go through 5 pairs with no tech on the charts whatsoever, apart from moving averages, because I can't be bothered to switch them off. Start with euro dollar. I want you guys and girls to give me 2 levels you would trade today. Okay, so based on that chart there, and I can zoom in, zoom out, whatever you want me to do. I don't want anything fancy. You don't have to hit me with, you know, funky patterns and underground maps and whatever. Make it realistic, David. If we see 106 today, something has gone wrong. But I don't mind. You want to give me a level, fine, give me a level. You give me levels and I'll drop them on the chart. So let's just do it. Let's just keep them horizontals for the moment, or trend lines, or something nice and easy. So there's the chart. I'm going to give you 10 seconds to give me 2 levels up top and down below that you trade. You want me to zoom in? So that's more of an intraday trade. Look at the chart. Where do you see the levels? With nothing else. Clean chart. Mike, you're going to short at 108.60. Okay, let's whack that on. 108.60. Let's take the old magnet off. Okay, it'll be there or thereabouts. Okay, there we go. 108.60 from Mike. You're going to short a break, Michael, on 107.80. 107.80. So it's just coming in. We've had a little nudge below there. Let's call it. There we go. Close as. Brand 107.74. What are you doing with that? You're longing, you're shorting. What are you doing? James going long 107.60. I might have to make these a little bit thinner, perhaps, in case we get too much on there. Let's do that and that. James long 107.60. Right about there. Okay, you're just seeing a level, Brand. What are you going to do with it? You're going to long it? Going to short it? What are you going to do? Now give me levels. Give me what you're going to do with it. Stuart just gone long because of a failed breakout on last week's low. So that is where we're looking at. Just in there. Where we're looking at last week's low. That'll be there. So that Friday low. Let's bring it in a bit so we can get a bit clearer. So James is having a little long off of there. Is that right, James? Sorry, Stuart. Sorry, James. Stuart just gone long because of the failed breakout. Is that where you've just gone long because we failed that level and we're back above? Zhao is going to do a break long 108.60. Yeah, good eyes there. Decent level up there. Some of you looking at this lows here. You want to break at those levels. Some want to go long 107.60. You want to go long somewhere in a 79 pip range, Bran. Come on, mate. You can do better than that. You've been here long enough. What are you going to do within those 79, 80 pips? Right. So, hang on. There is. We'll look at gold in a minute. Oh, mate. Meng Lim, 108.50, depending on a retest. If retest resist, then short. So roughly round about that level as well. So the 108.50, 60, give or take. Meng's in with shorting up there. Some of you want to buy the break above it. Okay, so good stuff. You're looking at the charts. You're identifying levels. These are decent levels. They pretty much come in line with what I'm looking at as well. I actually got bids in at 107.65 at the moment because I want to test this level here, which is a big historical level. I'll just zoom that out so you can have a look. So this 107.60 had a lot of action in there. It's one of those age-old levels that always has a saying thing. So I'm with you on that one. But good eyes, boys and girls. So what I do, I'll leave this on the charts that we've put on here, and we'll see how it goes tomorrow. Okay, we'll see what happened on tomorrow's show. We'll have a quick review, see whether you would have got your breaks, your holds, your longs, your shorts, whatever, and we'll see what happened. But good stuff. You're all long anyway from 107.90. Zhao. Yeah, I was a little bit long just into the 108, and I got stopped out pretty much at break even or sort of entry yesterday as we came back down through that level. So it doesn't matter if you're talking your book, it's a-okay. Mike, do you believe the rise today is due to the IFO? You know what? I don't know, because we had that IFO and I didn't see much of a reaction at the time. But we did start a bit, yeah, might have a bit of that. We've also had a bit of other news out as well. As I say, we had this bit of backwards going on the tariff stuff as well. But yeah, I don't know exactly why. I may have missed a headline while I was prepping the show and doing other things. So I'll check that out. But initially it didn't look like the IFO was going to be a big gangbusters number. But it could be. Again, sentiment has changed. Could be flows as well, month end and whatnot. To keep an eye on the clock too. Anyway, right, that's euro dollar. Let's go on another one. Dollar Swiss. Let's stick it on an hourly. Give me your levels, folks. Where are you going to trade it today? Where are you going to trade it today? You're going to be going long, going to be going short. Hope you can see that. All right, I can make the text a bit bigger if you can't. Dollar Swiss. Where do you want to trade this one? Where are you going to be long? Where are you going to be short? Go, 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 go. Short on hold of 88.60, says Michael. So that's right in there. David, you're already short. Okay, where are you short from, mate? If you don't mind us asking, and what you're looking for. And we'll have a look to see what might happen with your trade. Donna, you're already long. Where are you long from? So you're long, David's long from 88.23. So just pretty much where we are at the moment. Donna, you're long. Where are you long from? Therese, you're long, or you want to be long? Where you want to be long from? There's the chart. Do the work. So we've already got Michael wants to short hold of 88.60, which is fair enough. Your TP is, David, is 87.93. Let's see what that level shows up, 87.93. So just under that prior low there, boom, around about there. Okay. Donna, you're long at 95. You got the right pair. This is dollar Swiss, or you're talking euro Swiss. I hope you're not either long from up there. Yeah, you want to have another go at that 85, 50, 60 area. Yeah, I can see that just against these range tops up here. Meng is short 88.30, so right in the middle here. So a couple of you got shorts right bang in the middle here. So I assume you're seeing some sort of tech in there. Derege want to go long 88 around the figure, which is bang, pretty much bang in there. There we go. You'll forgive me the pip. Okay, so we've got a few of you knocking around in the middle of the range at the moment. I'm sure you've got your reasons to be long and short. You might be watching moving averages. You might be watching this, that, and the other. So it looks at the moment like we are in a bit of consolidation. It's going sideways. It's a fairly tight range. Obviously, we've got some bigger levels. If you want to look to the edges down towards there, 87, 50s, maybe up to 70s, or at least a high 60s down there. We've got this area, 88, 45, 50, whatever you want to call it, up towards this 60 level, which is being a bit sticky. It's definitely an old traffic zone going back some time. So these levels are pretty decent. So you know what it needs to do. All you guys and girls in the middle here, that's what you got to think about. If you're not getting above these levels or getting below these levels, again, I don't know your strategies. You could be scalping for a few pips and whatnot. So I'm not calling out your trades. I'm just giving a quick view over things. Yeah, it's pinging around the middle. We look at Gavin wants to look at the weekly. Let's do a quick look at that. Yeah, so we got this higher range here that we're just moving around the middle of. Let's stick a fib on there and have a quick butcher's what's going on. Yeah, so I know from my other dollar Swiss charts that we're still pinging around between these two fibs here. We did have a couple of little pokes underneath, but they couldn't hold. So we're not getting any holds below this fib around 87.80s. Okay. So that's significant at the moment. But otherwise, we're a bit of range trading up and down. Well, good luck with all your trades for that one. Right. Now, I'm pretty sure not a lot of you are trading this one. So let's have a look at the FTSE. Stick it on an hourly. There you go. Tell me what you want, what you're going to do. You're going to be going long, you're going to be going short, and where you're going to do it. And we're just talking from a, let's see what happens today. If you didn't have a position and you wanted to trade this one, where would you put your levels and where would you trade it? So this is the FTSE. Yes, Mike, I'll go over Aussie and Kiwi, perhaps. But I might do the same exercise. You can tell me what you're doing in it, let alone me telling you what you want to do in it. Catherine, I knew you'd be in the FTSE. You've got a short order in at 87. The figure, right, called it there. So that's a pretty decent level. Seen a lot of action recently. Bit of a pivot point, this one. So we've had this breakdown, got a bit wishy-washy, holding underneath it. So that looks a half decent level at the moment. David, short 87.40. Just coming in to that high there. Yep. Bit of a level as well. Not overly clean, but it's had its moments there, and obviously there it's holding below. So looks like a lot of people wants to short it. Gavin's 86.10.30 for a scalp. Either side for scalps, 86.10.30. So you're looking at, I know what Gavin's doing. He likes a bit of a zone, just like me. So he's looking at something. Bing, something around there. And Menling, long 86.66. It's about let's see if I can get it into there. Oh, no. Yeah, that's as good as you're getting. Me flicking around. Cool. Michael, short 87, 87.10. So again, another one into the figure and just into those couple of highs. Yeah, so you'll got some good eyes there. You're picking some good levels. So I'll leave that one on there. We'll see how we get on tomorrow with this one. Right, let's Mike, I'm giving you one. You can either have Kiwi dollar or Aussie dollar. I'm giving you the one. And Stuart wants to short a breakout of 8,600, which is there. Yeah, that looks sensible. Though I would say you got to be careful of that 80s level. Personally, it looks like if you clear that 86, it's got to clear that as well. So maybe round about there, 83, 85 area. So if you're looking for that break, I'm going to put my own line in my charts. I'll stick my own line in. So let's call it around about there, maybe a bit higher. Yeah. So if you're looking for that break of 86, you'd need it to clear that. I'll be very careful if we, get a fake out under the figure and it bounces off of that one. So good stuff. Good stuff. Right. Mike, you want Kiwi dollar. All right, let's get out for Mike. Or he won't leave me alone. Let's pick a one I've not got any tech on. Right, there we go. I'm going to add it onto. Can I add it onto there? Oh, bloody hell. There we go. What a faff this is now. Right, Mike, it's all yours. What are you going to do with it? Kiwi dollar. There's the chart. What are you doing? Not down to us, down to you. This is the Mike pair. You're going to get long 57.20. Right in there. Okay. Any reason why you're not long already, if that was your level? Because we've already been down there today. Been down to 57.11. And it's fine if you're not. I'm not telling you off or anything, but, you may have just woken up and that's where you want to trade. You woke up late. Yeah, always the way, isn't it? Why is it these trades always happen just before you wake up? I've had plenty of those in my time, I can tell you. David, he'd like it above 57.60, which is right in there. Oh, look at that. Spot on the pip. Yep, another fairly decent level looking there. And again, I'm just keeping these fairly short term. If you want me to have a quick look out, because I haven't got your eyes. Oh, look at that. See, you have a little look and you can see why perhaps David is picking that one. It's got a decent bit of price history to it as well. Yeah, obviously I can go in and out the time frames. I don't know exactly what you guys are looking at. Okay, so we're sort of doing this half blind, but I think it's a good exercise. And I say this to a lot of traders. Take a blank chart and build your tech up. Okay, and sometimes it's worth, if you end up like me, you're watching a pair for ages and ages and ages, and you end up with a chart like that with 100 million lines all over it, and you're trying to make sense of it. So that's why I like to have some clean charts as well. And from time to time, I can just take a brand new chart, get rid of everything, and just start all over again. Keep things fairly simple. But it's a good exercise because we all get caught up in the everyday. Okay, we all get caught up in the shorter time frame, shall we say? And sometimes you need to go through that exercise of just having a blank chart, nothing on it, and just build your levels and just see where you'd want to trade for that. So we know what you want to do, Mike. So we'll keep an eye on that one. Yeah, you're 57.20. Got a bit of action around there. Fairly decent level. You know where you're wrong, certainly at least below 57. So take the figure into account on that one. If you get a dip through 57.10, I personally wouldn't be putting stops that close to the figure. But if you wanted to, if you were just scalping, that's a nice tight trade and worry about the figure after. If we do get dips, 57, 56 down against these sort of lows, that's an area to look at. As I said, the figure there. Top side, definitely need it. above 57.60 and probably above those as well. So a bit similar on the top as is on the down. If you're going to get a break here, you probably need it about higher than this 60-70 area. We've had a bit of action there as well into that. So it's one of those secondary areas you've got to watch for. Just the same as down here. If you're breaking 57.20, you need to get below there. Okay, so we'll keep an eye on that one, and we'll put that on for there as well. Thanks, Catherine. I thought this might just be different, change it up a bit, just to give us a new dimension to the show. Saves me waffling all the time. You can do some of the work for once. Gavin, 56.90, 57.10. Mr. Zones. Right up to there, give or take. So that's where Gavin's parking his bus. And yeah, a lot of these levels line up to what I'm looking at on some of my other charts. Brand 56.80. You like that area, but I just watched the price action around there. You don't know whether you'd go long or short. 56.80. Well, you got to do something, Brand. Well, you don't have to do something, but if you like the level, then trade your level. That's the thing with trading. You can have 100 levels off your chart, but it's pointless. You ain't going to trade at least some of them. Okay, so you know the exercise, mate. You can plot all these levels on. Okay, I could use this chart with all your levels on and trade off of it. Okay, but what I would do is I'd zoom in and out, look around. I'd say, right, we got one zone, 2, 3, 4, 5 levels in there. Okay, what levels would I really like trading? You have got your levels you'd like to trade. I'll be looking and saying, well, what would I really like to trade? We've got probably a bit of a range here. 100 pip range, 56.80s, 57.70s, so 90 odd pip range. Okay, so I could say, right, I'm just going to trade that. I'm going to do nothing in the middle, and I'll just trade the edges of this range, because that's where we've had a bit more definition. Or I could trade this smaller range, 57s, 57.60, or I can just scalp off the levels or whatever. So that's what I do. I'd look at this and say, right, well, I like that one. I half like that one. I score them in terms of what I think are going to be the stronger levels. And that's how I pick my trading. So as I say, it's a good exercise to do this. And you can trade, if you can understand level building, price action, looking for what moves, where you get the support, where you get the resistance. Okay, it doesn't matter what asset you trade. Okay, you can trade anything, because all these movements, price in every asset can only do one or two things. It can go up or it can go down. Okay, it doesn't matter what the asset is. So everything does the same thing. They all have the same patterns. They all have areas of support, areas of resistance. What differentiates them is what drives the price moves, be it data, fundamentals, headlines, whatever. So the easy part of trading is this, identifying price action. The hard part is getting the news and the fundamentals and everything else to align with your trading levels. Because if RBNZ suddenly decide to cut rates now, then this Kiwi's going through the floor and your levels don't mean shit. Okay, but you know where the RBNZ currently is at the moment. Okay, they may still be cutting, they may be going to a pause. So on that basis, further downside on the RBNZ is a low risk option at the moment. And then you look at the economy and then you do everything like that. So you can start off with prices, then you need to understand the fundamentals of what moves a particular asset. But all this, it's standard. Pick a clean chart, go and do it. Put your levels on. Something you've never traded before, go and try trading it. You do it on demo account if you want, just see how you get on if you're not confident, and just go for the exercise, because when you do that, that's where you get the experience. Okay, I've been in this game long enough. Came from a area where we didn't have charts, we didn't have technical indicators, we had support and resistance, we knew where the bids and offers were because I had that inside knowledge. And so when I came into trading back to trading full time, and I had to be in the retail space, I had all this to deal with, and I had to learn where support was, where resistance was. That's why you don't see a lot of funky tech on my charts. Okay, I can trade these with just a few lines and be done with it. But you get yourself in that position, you can trade anything in this world, but you've got to then understand what's moving it. Right, so what's the time now? 10 past. Maybe one last one, if you've got the patience for it. You give me an asset, any asset you like. As long as I can get it, a chart of it, we'll have a look at it and we'll see what we can do with it. And I'll add that to the list. And as long as it's not something stupid like dollar turkey, because you don't need any tech for that. It's going up and that's it. Oh, gold. You wanted me to look at gold. You did. I will look at gold. There you go. Go on then. Your turn, Derej. All yours. What are you doing? Give me the lines. Gold. You keep asking me every day and Kay about gold. What are you doing with it, Derej? All yours, mate. You have the stage. Buy at 313. There we go. That'll do. 3 at 13. And where are you going to take your profit, Derej? Graham wants to buy at 3K. That's pretty solid. He might be cheating though and see my analysis in the chat room. But I'll take it. I'll take your word for it that that's your own level. So Derej wants to buy at 313. Graham wants to buy at 3,000. Anyone else? Anyone else? Where do you want to buy this one? Sell this one? Give me the levels, boys and girls. Where do you want to trade? Key watching the 2025, 23, 25 area right here. Yeah. That's what Michael's watching. So you'll take a long above and a short below. 28.60 says Zhao. Oof, 28.60. Oh, blimey. Could be waiting a while for that one. Doubt we'll be trading that today. And if we do get down there today, something's gone wrong. You might want to trade it after that. Derej wants to take profit at 33s. So 20 ticks. There we go. That'll do. So you want to buy it there, down at 13 and sell it up there. Yeah, I've got my levels just a bit higher, 38. I'm going to chuck in my level. I know my level's off by heart by now. I've also got that one that Michael's got around the 23, 24, 25 area. I've also got this one down here at 3K, obvious, for that one. I'll, as I say, off the top of my head, I've got my other level down here at 29.80. That for me is a fairly decent one as well. And then before we get to that, Catherine, you're in your footsie short. Oh, let's go. Catherine's in. We get there? Did we get there? Let me have a look. Get in it. I mean, obviously this might be a different fee to what you're looking at. So we've got 90. Did you get a hit on that one? Maybe on a futures contract you're in. So, well, good luck with that, Catherine. Hope that goes well for you. Hope you make plenty of pips out of that. We'll keep an eye on that and see how it goes on that. It's all good fun. Now you've got to make pips, Bran. 87.50 a level in footsie for Gav as well. So just above here. Is that one of your zones, mate, or just a level? Oh, there we go. That'll do. Right in there. So yeah, we all have different numbers, but they're all pretty close together. Anyway, back to gold because I know what Derej was doing. So some decent levels in there. Yeah, I mean, this looks like a carbon copy now of, let's see if I can show that. This looks like a carbon copy of my chart now in gold that I will use every day, which obviously isn't going to show me all my levels on it. Oh, I give up this machine. Anyway, mine does look like that, similar levels to all these in here. So we're all well aligned, and that's good. I like it when we're all aligned. It shows we're all seeing the same things, all picking up the same levels. But you know what also that does? If a lot of people are looking at the same levels, this is why technical analysis works. It doesn't work because there's a coloured line on the screen. It works because we're all looking at the same numbers, and all our trades, if we're doing the same thing, that weight of money is enough to make a level come to fruition. Okay, so tech is self-fulfilling. Okay, if everyone's looking at a 200 daily moving average, okay, and everyone's trades it, and then I'm talking even the big banks who will say, oh, we're approaching a 200 DMA, they all love the 200 DMA, they're going to get a lot of money behind that, and that's why levels work. That's why tech levels work. It's not because you've got fancy mathematical numbers on your screens, because everyone's looking at the same thing. Bear that in mind. That's why I don't use an awful lot of tech either. You won't find me using any funny patterns, you know, because how many people are really looking at those? Andrew's pitchforks and all that sort of stuff. People do, but how many do? I want to know that there's 10,000 people watching that 200 DMA, not 500 people watching a pitchfork or something. Okay, because if 10,000 people decide to trade it, you're going to get a reaction there. Right, so we've got this watch list. As I say, I'll keep this open for tomorrow. We'll see how it got on, what levels held, what levels didn't hold. We've got some decent ranges above and below, around the price. So we'll see what happened tomorrow, and we'll call that a show for today. So thank you very much, and thank you for taking part and giving your input. That's what I like to see. Saves me from talking all day long. Right, have a great day, everybody. We'll catch you all later on the face, and otherwise I will see you tomorrow as always. Have a great day, folks.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.